Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to be having a look at this bearish pennant that's been developing on the daily chart and what this breakdown, as per the title of the video, what this bearish pennant breakdown means for the charts going forward. And we'll also have a look at this in the context of the Hikake pattern. We'll also have a rundown on the time frames and see exactly what's happening there. We'll also have a look at the candlestick patterns and what they're giving us an insight into. And I'll have a discussion around the CPI data, which comes out tomorrow, and what the Fed may or may not do on the following day with their interest rate increase. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking now. Okay, so we're going to start on the daily chart and look at this bearish pennant which has been forming with the higher highs and the higher lows along the way. And as you can see with some of these candles over here, that was preparing for this particular candle to break down out of this bearish pennant. So what we got with these candlesticks here is that we got a tweezer top over here, broke down, and that was followed by an indecision candle, more of a gravestone doji candle. And whenever you see these, always put raise on top of that and at the bottom, and whichever side it breaks is usually the side that is going to break towards. And usually with this type of pattern, it's a gravestone doji pattern at the top of a trend over here, so the chances are it's going to break to the downside. And what gave us a more of a clue, and what gave us an even stronger clue here with the next candle, is that we got an inverse hammer candle here, and that usually has a long wick at the top, which means there's a rejection of higher prices. We didn't close above the gravestone doji candle previously. That was followed but before by a tweezer top, which is bearish. So there's a bearish pressure developing here, and that led to this inverse hammer, and all that culminated into creating this candle over here, which is now broken out of this bearish pennant. So we can see quite clearly that the pressure is certainly more to the downside. And I've put a target here at 16,423. If you want to know the background of all that, if you go to my Twitter page, about 3 days ago, I gave that target in these series of tweets, which seem to be playing out quite well over here. And if you haven't already joined me on the Twitter page, then you have an opportunity to catch some of my thinking in between the videos. And if you've been following me on Twitter, you'll know that last night I sent this chart waiting for the candle to close on the weekly chart here to see whether this Hikake pattern was going to play out. We can have a look at that Hikake pattern now, but certainly this is the target. Now that we're breaking down from this bearish pennant, it looks like the target is going to be around about the 16.4, and we'll see how things develop from there. Obviously this could be a fake out. We've often seen breakdowns and then break back up there, and that could be quite bullish, and then we go to the upside, but it's looking increasingly unlikely. And if we have a look at this Hikake pattern, we're waiting for a candle to close above this level here of the second candle from this inside bar candle that came down on the FTX candle. So what we're waiting for is a candle to close above the neckline of this candle here at around about 17,169 to be precise. And here we are breaking down with a red candle. Obviously it's only Monday at the beginning of the week. We'll see how it develops. And obviously the Fed will have a big say in this when it meets on Wednesday. But before Wednesday, tomorrow, Tuesday, we have the CPI data from the USA. The expectation on the CPI data is that we should get some good figures. And the expectation from the Fed on Wednesday is a 50 basis points increase rather than the normal 75 basis points that we've had over the last 4 months. And that's what the market has priced in. People think that 75 basis points has been priced in. So if we get 50 basis points, we'll be doing this. And I don't think that's the case. And if we do get a 75 basis points, which is unlikely now, but if it does, depending on the CPI data, this is where we're going to be heading. And the 50 basis points will just mean the continuation of what's been developing over here. That's my thoughts on that. But coming to this Hikake pattern, remember it's a 6 candle pattern over here. So we've had 1, 2, 3, 4, 5, and we're on the last leg now, the last week, to break above this level here. If we fail to do that, this becomes invalid. But also notice this pattern developing here now in the last 3 candles. So we've had a strong green candle here. It's followed by a indecision candle in the middle, and usually with a higher degree of probability it's followed by a big red candle over here, and that is what you call an evening star pattern. And this is what it really means over here. You can see it's quite a bearish pattern. We haven't got this yet, but it is in the makings of it, and we'll see by the end of the week whether this happens. But be on the lookout for this pattern developing here. So you've got a heads up now on the weekly chart that this chart pattern could be breaking down to the lower side. And when this comes down, then that is where your entry point might be. That might be the end of the current pattern here, or it could even push it even further down. So we'll have to see how it develops over here. But the way this is developing feeds into this pennant breaking down as well over here. And if we have a look at the Bollinger Bands, the Bollinger Bands are down here at the moment, 16,200. So by the time this comes down, the Bollinger Bands might make their way up to this confluence of around the 16,400 level as this is coming down. This looks like a strong support line over here. And if we have a look at the ATMA, we can see on the daily chart here, we had a big break up here of the ATMA with this green candle, and since then it's failed to follow through to the upside by going sideways instead. And these candlestick patterns here, which seem to be bearish, have meant that this bull flag is breaking down into a Bart pattern to the downside, and currently we're just losing the ATMA now with this candle. We'll have to wait for the daily close on this one, but it doesn't look very good because this candle is preceded by these bearish looking characters over here. And if we have a look at the 4-hour chart, it's giving us a little bit of a clue of what's happening immediately now. So we've broken this pennant here with this candle, and now in the short term, in the next 4, 8, 12 hours, it may well be that we come and retest this level up here before getting rejected to the downside. So there could well be a little bit of a run up in the immediate short term. So I would expect a retest around these levels, around 17.1, before a breakdown to the downside. And if we have a look at the dollar on the weekly chart, you can see the overall bigger picture that while Bitcoin has been coming down since the beginning of the year, the dollar obviously has been going up incessantly here. And in the last few videos, I mentioned this candle over here, that be aware of this candle. This is the Gravestone Doji candle. And I mentioned that it's unlikely that we're going to go above this candle now, because what we had was a rejection of higher prices over here, and that was alerting us to follow some of the candles after that. And what we got with this red candle over here was an outside bar candle to this green line. And usually you find these outside bar candles on the higher time frames extremely powerful. And I mentioned that in the previous few videos that I would be expecting a downturn from now on here. Although I'm expecting a run up back to retest some of these levels, maybe up to this level here or under this level here. So anywhere around 108 or around 109, 108, 109, this region here, we could have a retest of that. And that's because, as you can see, I've got this marked up here, this support line going back to May and June around here. So we've come to that support line. So we can now expect a counter trend move, and that would then create a higher low, just like for Bitcoin. So this is on its way down on a longer term basis as far as I can see here. So going on to the CPI data for the USA, this is what the expectations are for this month here. So tomorrow, 13th of December, 1:30 GMT time, the Greenwich Mean Time, UK time. This is the figure we're waiting for, the actual figure. Last month it was 7.7%. So we need to get at least 7.3 or better in this column over here to force the Fed's hand on Wednesday to increase the interest rates either by 50 basis points, or if it's a good figure over here, that should be maybe possibly 25 basis points. But if this comes in worse than the 7.3, then we could still expect a 75 basis points increase. And we know the consequences of that. So we'll just have to wait and see. Only time will tell. Tuesday and Wednesday, very important 2 days for the Bitcoin price. Looking at the aggregate picture, starting on the monthly chart, we can see with the blue line here, the 8 EMA, quite clearly the trend is to the downside. So we really need to get above that level to show us some tentative signs that we've bottomed out. And that level is now at 22.6. But much before that, if we have a look at the weekly chart, the weekly ATMA is at 17.5. So we really need to get above that level to give us some hope. But as you can see, the historical part of this weekly chart tells us something. That once we lost it here at 69,000, we made one 2, 3, 4 attempts to get above it. So what we need is, when we do get above it, we need really a further 1, possibly 2 candles to confirm that we have finally reversed the trend. And the levels to look out for on the weekly chart is the underside of these candles here, the wicks over here, at around about 18,200 to 18,500. And a lot of people are very frightened that they might miss this move here. But when you put this level to 18,200 to 18,500, it's very simple, because this is a very strong resistant point. It extends all the way back here to the June low of 17,500. So there isn't any need to panic when you know that there's a level here, and this would be a safe level. So once we get above that and then find confirmation and start moving higher again, then that would be the point for the entry, and we won't have lost a lot down here. But at least you'll have made sure that the reversal has taken place. So that would be the first sign that we've bottomed out at these levels here at 15.4. And of course, if we break below these levels here, at the 15.4, 15.5 level, we know what's below this here. And I've gone through this many times. We're looking at around about the $12,000 mark over here. And that's based on this level here, with all the cluster of activity all around here. So we'll just have to wait and see. This is exactly what's happening. So you've got the bigger picture as well as the shorter term picture. And a lot depends on the CPI data tomorrow and what the decision the Fed takes on the Wednesday. So keep a lookout on the Twitter to give you some updates in between my videos. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.